From the floor of the CME Group, this is Danny Riley on this Wednesday, April 7th. Sorry I've been off for a few days. Believe it or not, when I go from the trading floor, I generally will go home and I'll do some work at night, but really what I've been doing is working at a 38,000 square foot facility that I own on the west side of Chicago. I actually get down and dirty. And well, we get down and dirty here, but it's a different type of down and dirty. You know, the S&P has been up 21 out of the last 27 days. And of those 20, that's 6 down days and 27 days. One of the days was unchanged. 2 of them were 5 handles or lower, and the one was 4. And the down days are just really, really small. And when the market started to crater a little bit this morning, we got back into that juicy thing, thinking that we're going to see some type of sell-off, and then boom, they go through the stops at 81 down to 79, and they go straight back up. You know, the real deal here is, everybody, that the markets are slow, and the higher they go, the more risk is built into this rally. And along with that, even the short sellers and the buyers are concerned about how lofty the market is, but yet we still get no sell-offs. Now, we don't want to start talking about another crash like '87, but we were talking to a very well-known trader today that reminded us that we said to him, you know, have you ever seen anything like this? And he said no. The only other time that he had seen anything like this was before the '87 crash. Now, again, that's not to say that we're going to crash, but you know what? The big thing here is that the market's, it's a two-sided market. You know, you have the downside and the upside, and right now we only have upside. So in order to reload the markets right now, the markets are really, really, really in need of a good sell-off, but yet we don't get it. Now, maybe this will change a little bit as we go further into the summer and into the rate cycle that as the Fed raises interest rates, but right now, when the bonds are down the way they are, and they got down to 114.5 today, you know, when that type of selling goes into the bond market, that money comes out and it's being funneled into stocks. Now, maybe the amount of money going into stocks is a lot smaller, but there's still an upward bias, and there's still money going into stocks on the upside. Now, we've been pointing out a couple of levels. 1181, 1183, we got it. You know, before that we had the 1150 level, we got that. Then we projected to 1181, 1183. Now we're talking 1201. Now, Brian Shepard was on the other day and said something about the next resistance level was up at 91.93, and I'm not even quite sure of where the high is, but what we can tell you is that there is a bunch of long-term buy stops that have been built up above the 1198 level up to 1203, 1204. Thus, we have that 1201 level that we've been talking about for a while. But really behind this, you know what, if the market doesn't start to correct, the higher levels are going to start to be projected. And I think it was Abby Cohen that said that she thought that the S&P would trade 1,300 in 2010. But I don't think that I don't think that she was talking about in the first quarter of 2010. This was supposed to be something that went out over a full year. And in fact, I think the way they were thinking is that we would correct at some point, come down to a level, trade at a level for a while, and then gradually start going back up into the end of the year. Well, we're not doing any of that right now. We're just going straight up. You know, we'd like to give you more here. There isn't much to hang your hat on. The markets are firm. We suspect that they will remain that way. You know, and then we're looking at, and the funny thing about April is the way that the month is set up, we're going to be right into the April expiration next week. Now, statistically, starting this, you know, if you're looking for the trade that we look at, you're always looking at some type of dip or sell-off going into the Thursday or Friday before the April expiration. Now, as far as the stats go for the April expiration, they're all good. This Friday they're good, Monday they're good, Tuesday they're good, they get a little weak on Wednesday, and then they're back up Thursday and Friday. You know what? We're like everybody else. We want to see a sell-off. Sell-offs bring more volume to the table, and it creates a lot more trade. And right now we're just stuck in this grinding upward motion. You know, right now the pit has got about 30 to 40 locals in it. Generally on a day like this, we'd have 100 to 120. As far as volumes are concerned, we're low. We've got 5,000 big S&Ps traded, and when you take out the 180,000 minis traded in Globex, I think total volume comes in around 750 or 760,000. That is not what we're here for. We're here for the big volume bang-ups, and we're just not getting it. You know, this is not going to remain this way forever, but for right now, that's what we've got, and we got to deal with it as we go. We'll be back tomorrow.